Good morning and welcome to the early bird, and also Friday the 13th, which is a bit of a bad luck day, but typically people act more safely on Friday the 13th, so there's less traffic accidents and so forth. So let's hope that's the same with our trading as well. Okay, here we're looking at the S&P 500, and this is the same pattern for the Dow Jones as well. Now, this is an important juncture now over this pattern here in May, because it can be a corrective pattern in terms of that we've got an A wave down to here, and then we've got an ABC for the B wave, and then down for the C wave here, and then we move up from there. So that's one scenario. The other scenario is that we have wave 1 coming down through to here, the A, the B, and the C for wave 2, this 2 here. Okay, so and then from that wave 2 there, we've got down for 1, we go back 61.8% or thereabout, and for 2, and then we start moving down for the third wave. Okay, so we've got this ABC, or we've got a bigger bear pattern unfolding. If it is a bearish pattern, then this will move down quite quickly in terms of this being down for wave 1 to here, then back for wave 2 to here, and then this one here would be wave 1 to here, wave 2 to here, and then we would look for wave 3 to move down quite quickly, and wave 3s do move quickly, so that will come down rather sharply. So it could be producing a good selling opportunity here. So that's what we're up against. So what we need to do is we need to, because it can be either way, and it'll give us the direction of the next larger pattern. This, whatever occurs in here, is what we need to study in here. So we need to have a look at this particular pattern here to see if it's corrective or impulse. And yeah, so that's what we'll work on. And we should know by tonight, we'll see more of a pattern working in through here. In the Dow Jones here, it's the same situation as well. We've got either down for the 1 or the A wave, back for the 2 or the B wave, and down for the C wave here, or we're coming down for wave 1 here. So being the wave 1 down through here, we would be looking at this 5 waves down here, 1, 2, 3, 4, 5. Then we'll be looking for an ABC back up through here. Now the ABC can be in here in terms of an A and a B and a C, and fail from here and then start to move down through here, or it can be an A and a B to here and a C to here and then fail that point. So on the upside, we'd be looking for 5 waves, and it's really looking a bit like that, which is good in terms of up for 1, back for 2, the third wave going up here. So this would be the 4th wave here, and the 5th wave moving up through here. Yep. So once we do get 5 waves coming up through here, what we'll see is an A and a B and a C coming back. And then we need for that to play out, then we need to see if it's going to push up from that point. But getting 5 waves here will give us another 5 over here. And what I'm hoping for is that if this is 5 waves here, then we will, after a correction through here, we will get another 5 up here. So I'm hoping that breaks the 12,772 there, and also the 12,800 as well in here. Because that would give us the bigger bullish pattern. And the reason for that is that if this price moves up through here and takes out the top of this wave here, that one there, so 12,772 there, then would have an overlapping wave structure, and it would make this one positive to the upside. Okay, so that's it really. Keeping it really quite simple on the on these markets, on the US markets, is that if the price comes back above the 12,772, I mean, it will react there because of all of this, but by piercing that there puts a bullish note into the next trend. But it would be 5 waves up, failing here, 3 waves back, and then another crack at it up through there. So it could take 2 sessions for this to work out, maybe 3 at the max, or we might get some really clear, fast move tonight in the US. No major news is ready to come out, so we probably see it sort of stay in this range here, but we're looking for a breakout of that there. So that's the situation. So it's a wait and see there. A bit the same as the English markets as well in terms of this as well. So if it's going to be a bearish case, we're looking for the 1, the 2, the 3, the 4, and the 5, and then we're looking for a 61.8 retracement back, which would be in here somewhere. Here would be looking for an ABC correction in here. So the ABC would be something like this. It would be 5 waves to here, and then as wave A, and then an A and a B and a C for wave B, yeah, and then up for C, which would be in 5 waves, which would be the 1, the 2, the 3, the 4, and the 5. So we could sort of see it failing through here. This top may already be in play here because this move up through here would be 5 waves, the correction back here. So this could also be 1, 2 to here, 3, 4, and 5. I haven't had time to pull that apart just yet. So if you're trading this market here, this well, the midpoint here, the 5950, if this became resistance, yep, then we'd be seeing a larger bearish pattern unfold here. If it does have a little 5th wave to push up there, it needs to reject the 6,000 very quickly and work back to the downside. If it sticks to the 6,000 here, and starts to trade above it and below it and all those sorts of things, then it's more likely to be a bullish pattern, and the Dow would be in the same boat as well, pushing up through its new highs there as well. Now, the SPY, our local market here, just have a look at this is the XJO here, and we're looking for this to come back to the 61.8 retracement level. Well, anywhere down here is sort of fine, but we understood that this was becoming a corrective pattern in here, and we'll be making a new low. So yeah, so look, we need it to push up from here. This is just a bit of a rough estimate there, but I think it was 4666, which is the 61.8 retracement level, and the SPY has moved slightly differently, but it was at that sort of level there last night. So what I'm sort of hoping for here, and it is a bit sort of hoping, I'm hoping that the 61.8 retracement level is in place now, and we will work higher from this low here, and but we need to see positive patterns within all of this. So we need to see 5 waves up in terms of 1, 2, 3, 4, and 5 up through to here, then an A and a B and a C across here, eventually finding support on the 4720 here, and then pushing higher still. Now, as the Dow Jones needs to push higher to get up to the 12,772, we want this market here to come up to that that scenario as well. So just sort of having a bit of a look in here while chatting, but this 72 number has really been sort of pegging the market through here, so it's carrying a fair bit of significance through here, as you can see through here. So it's we need the market, we need our market above the 72 and the 48 here. So all of this is just a retest of this, but calling this in here as a low is a big call, and it's trying to buy a bit of hope and so forth. So we just got to be careful about the situation. There's plenty of resistance all the way up through here. Yeah, it's a long shot, but we just sort of need to run with it. What we have been doing over the last few days is well, since the first year, is navigating through here. So it's been choppy. I feel that we've done a pretty good job and been on the case with it. But what we want to see now is we want to see if a bigger bearish picture is going to emerge, or a bigger bullish picture, and both are viable. And I'd rather wait for the evidence to start rolling in, and we can expect that over the next day or so. Now, this would also be the same with the Indian market, the Chinese market. The Nikkei's in a different sort of pattern and world altogether, so that's got more of a bearish connotations, and probably worth a short sell actually from the 10,000 mark if you're looking at that market at all. But yeah, so what we're looking at here, we want to see if this is the low to come in here. But we also need to give it a few days to see what pattern emerges through here, and what sort of volume comes in through here as well. There was a fair bit of volume that on the futures market, I think it's like 30 odd thousand, that breached the support level there yesterday. So it's broken it, it's broken the support on good volume. So we'll see how that that unfolds there. But yeah, so okay. The main drivers, we got oil here. So oil's still at a very weak spot. So we're looking at 5 waves down through here. And then we're looking at a wave 2 to come back, 50, 60%, whatever, and then move down from that there. So what we're seeing here now, I don't know if you can see this in here, but there's 5 waves in here in terms of 1, 2, third wave with 5 waves in it, the fourth and the fifth wave here. So we're seeing a 61.8 retracement level, which would probably be up around here somewhere, but we are seeing the 100 being rejected here. So just keep an eye on that. The more that fails there, the more chance of making new lows. So we'd label that as a wave 1, that as a wave 2. Now this correction here, that could be complete there in terms of the range that it's completed it in. Let's just give it some more time, because the market is positive and will be positive for a little while. So we'll see something like another push up to here, and then back down, and then a push here. So give it a day or so here to see if it rejects or accepts the 100 there. If it looks to fail, then you want to use the 90, the 98, the 96.50 here as all the levels as to build in short positions if that's going to be the case. The copper market here, base metals. What we're looking at here is this move down through here. Is the blue line is 1, 2, 3, 4, and 5 to move down through here. We have been working on the smaller degree of wave count on the sort of the gold one here, just the gold color, and that's what we've been sort of working with there. So we've been looking down for 1, 2, 3, 4, and 5, the 5-wave impulse wave. And in this last wave here, this wave 5 here, we've been looking at yesterday the 1, the 2, and we were figuring there'll be a third and a fourth and a fifth. So that's coming there. And then we're looking at the retest here as well. So this retest here, I was looking at it in this way, that it would be a larger fourth wave in the blue line here, and pulling back to 38.2% of the third wave. So this blue line here, 38% of that, which comes in around this level here, which is about right, because the fourth wave here normally pulls back to the fourth wave of 1 lesser degree, and that would be at that place there. So now fourth waves can be complicated, but I've just pathed out here a simple ABC correction. But as you can see here, this fourth wave here, that was reasonably sort of simple in terms of an A and a B and a C. So you can kind of expect that again in through here, but just bear in mind that fourth waves are time consuming, they're very corrective, and they can be 5 waves structures in terms of overlapping triangles and so forth. All the tricky ones occur in the fourth waves, where wave 2 is normally quite simple. especially if wave 2 is simple, then wave 4 will be complicated. So we can actually come back in here and we can look at wave 2 here, and that was actually quite simple. So that means that we'd have to expect this one to be complicated. It's the same as this one here. This one here was reasonably simple in terms of an A and a B and a C, where this one was more complicated. So it's a guideline of alternation, which is in nature itself. Okay, the gold market here. I feel like it's sticking to the 1500 here, so I'm just a little bit like the Dow, just running on the premise that this is a larger wave 4 that we're dealing with here, and it, being a corrective pattern, but being a wave 4, it can also be complicated, just like I mentioned. So it's still got growing space to go across here. So I was looking at this as being an A and a B wave and a C wave up to here to make the bigger B wave, and then a C wave down here to make the wave 4 here. There's a couple of ways to count all of this here, even a bearish count in terms of down for 1, back for 2, and down for 1, back for 2, and so forth, and eventually sort of moving down here further. But I just want to see, like I mentioned, when this first started, when this first arrived up through here, is that the 1500 is a medium level. It will carry a lot of weight, and 5 being the second strongest number sort of doubles that weight a bit. So we're just seeing if the more that this price sticks to this medium level here, the more chance it is of being corrective. And if it is a large corrective pattern, likely a wave 4, then we will be looking at higher ground once it finishes. And the next level, yes, the 1600 is important, but the 1650 is more important, which is the next medium level there. So we'll deal with that in due course. Okay, the currencies. Looking at the euro here, we've seen this strong move to the downside through here for wave 1. Yeah. So then we've had a and a B and a C, a very shallow correction there, and then once that wave 2's been in place, then we've got 5 waves to the downside through here, and we're looking for wave 2 to come back here. The wave 2 at the 61.8 retracement level can come back to the 143. The euro doesn't has shallow corrections, so it can be finished where it is here. This would be looking at it here on a 2-minute chart here. So you can see that it works through the levels quite well, and that's how you need to trade it. If it finds support on the midpoint here on the 50 here, yeah, then you can trade 42.50. So if it finds support on the midpoint here, the 50 on here, then you can trade it up to this group here again, and if it finds support on here, then we know it's going to the 43 at the 61.8 retracement level. But as it stands at the moment, it's weakish, and there is good support for it here, as this bounce had shown you off here. So if it comes back to this subgroup 1 area here, the 10, 20, and 30, it will give a bounce off here, bounce back up a bit, and then it will work its way through here. But it will be, when a market moves down through group 1, it's normally very rough going, it's not smooth. So just be aware of that. And this is much the same for our local market as well. In terms of the Australian dollar here, we're looking at this being down for wave 1, back for wave 2 here, and then of the next smaller degree down for wave 1 and going back for wave 2. There is also the possibility of this being an A and a B and a C, but we'll stay with the bearish situation at this stage. So down for 1 here. So you can see that if this is down for 1 here, then the wave 2 that's coming into play here at the moment, the 61.8, would be back up at the 107.72 here, that area there where the supply is. And of course this has also played out through here as well. So you can see that don't worry about that too much, but anyway, a strong resistance point through here, and the 61.8 retracement level of this length here would be back up in amongst all of that. This being a corrective move up here, in terms of the proportion and size, this wave 2 so far seems a little bit small for the move that occurred here. So this can just be the A wave, the B wave, and a C wave moving up. So what I'm saying is this corrective move is likely to get larger. So just be aware of that. And when you're trading a rally to the upside, then you want to keep the trading ranges smaller and just work the sub levels there. So this is the 2-minute chart here, and you just need support. So if you're going to trade long to the upside from here, then you'd want to make, this is retesting here, so you want to make sure that this is support on the 72, and then as soon as it pops up here, or get a position here, if it finds support here, get a position here. You can see that the stops would need to be under here. This is anyway, we'll see how you go there, but you want good support on here, and that is developing, but you also want to see the Australian market open here. So that's just resting back on there from the close. Not that it closes, but yeah. Alrighty, that's it. So just recapping here, the ASX 200, the SPY, we're looking for this to be the low in place, but we don't have any evidence to prove that. So we need to be careful there. It's going to take a day or two to work that out. And the same with the Indian and China markets as well. Same situation is occurring for them. With the Dow Jones, we've got this ABC pattern occurring here, the A, the B, and the C, for a bullish pattern to push further to the upside, but we don't know that just yet. We need to observe what this pattern in here is and what levels are going to be breached here. So the 12,772 above that, we can start to look confident at our local market being bullish from that point, and we can start moving in. So that hopefully is all going to occur next week. Otherwise, a breaching of the 12,600 here really puts us into a bearish mode here, and certainly under the 12.5 here, the 500 puts us into a bearish mode, into a bigger degree, and that would be the same on our local market too. There at 4,500, under that really opens up a larger bearish pattern as well. So yeah. Alrighty, well that's it. So have a good weekend, and see how we go tonight on the Dow. So good morning and good luck.